you are never going to be able to make any deal work in underwriting if you assume the worst of the worst of the worst of the worst of the worst.
Right.
So you're not going to hit your goals and your targets and your, expected returns if everything goes wrong. But you need to know that you're at least going to be able to float by if everything goes wrong. And what happens if half the things go right and half the things go wrong, kind of a thing. So, it's hard to underwrite it completely with everything going wrong because it just won't be competitive.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.
Kim Radaker Bays has completed 20 transactions with over a 2x equity multiple in the last 3 years. She currently leads 10 properties totaling over 3,200 units across DFW and Houston. Kim, welcome to the show.
Thanks so much for having me on.
Pleasure's mine. There are 3 questions I ask every guest who comes on the show in 90 seconds or less. Can you tell me, where did you start? Where are you now? And how did you get there?
Started with a finance degree, spent some time in the retirement plan industry, working in 401ks and defined benefit plans, then got into some single family. And then for the past almost 11 years now, have been in multifamily. So started with a 77 unit property, and over time now, between things we bought and sold, about 9,500 units.
Wow. That's a lot. 77 units now to 9,500 units. In 11 years, you've seen a lot of things change. I mean, we've gone from everything was basically on sale and you could buy anything you want to now you can't hardly buy anything at all without a dogfight to get the deal done. Tell
Absolutely.
me about that. Tell me that story and how you guys are positioning yourself now.
Well, gosh, it sure was easy when everything was like $30,000 a door, right? Now even the horrible stuff is $100,000 a door. So right. It's a very different marketplace. I suppose when I first started out, I was able to get one of kind of the first loans that came back after the 2008, 2009 stuff. So it was in 2011. It was just when lenders were starting to actually lend on distressed properties. Kind of before that, for a while, there was kind of no option to get loans on value add. So we were wondering if we were going to have to buy the first property actually for cash. And then today, fast forward many years, many units, the lending environment has gotten a little crazy again. For a very long time, it was very close packed groups of lenders. The spreads were the same. The base rate was the same. Whether you wanted fixed or floating, there were options for both. Now I would say the fixed rates kind of have built in all of the potential yield curve and then some. So, kind of have to almost go with floating rate at this point in time. But also the floating rate, it used to be that basically everything was going to be in a narrow band, SOFR plus whatever, and you're going to have 8 or 9 loan quotes that are all going to be in that same band. And right now we've got some stuff, and it varies somewhat based on leverage, but also just based on lender appetite right now. Some things are SOFR plus 250, other things are SOFR plus 450. And so it just seems to be a little more all over the board in terms of lending terms and what's possible.
Wow. That's and that's, I mean, is that just because lenders don't know, they don't think the market's found its footing, or what is it?
I would guess it's a lot of that. I think they just kind of don't know exactly what it's going to happen, exactly where it's going to go. Definitely expected SOFR to increase, but for the spreads to have gone so wild over SOFR, I think was a little unexpected. It's been very interesting, and sort of, there's just a whole lot of uncertainty in the market right now.
What have you guys done, I guess, to make it where, I mean, because you got to underwrite to a certain, you still got to plug a number in your underwriting spreadsheet. What are you guys doing on that front to kind of even be able to synthesize decent numbers, when you're doing your underwriting? We're really kind of stress testing the whole gamut of things. What if we can get the loan for SOFR plus 300? What if it's SOFR plus 350? What if it's SOFR plus 4? Let's look at the yield curve that's going forward. How far into that can we get? Can we underwrite the 100% of it? Only 50% of it. What does that look like? Make sure that kind of you're covered on the worst case scenario, but understand sort of what that whole spectrum looks like. So you kind of have to rerun the numbers over and over again, right. Playing with it and kind of make a note of what the results are and seeing where that goes. You said that right now you almost have to go with a floating rate. Is what risk do you see in that? I mean, most of the time you're going to have to buy some sort of an interest rate cap anyway. And really, I think the big thing is make sure that you're underwriting it with best and worst case scenarios in mind. So make sure that you're underwriting it and all of those things. Now, you are never going to be able to make any deal work in underwriting if you assume the worst of the worst of the worst of the worst of the worst.
Right.
So you're not going to hit your goals and your targets and your, expected returns if everything goes wrong. But you need to know that you're at least going to be able to float by if everything goes wrong. And what happens if half the things go right and half the things go wrong, kind of a thing. So, it's hard to underwrite it completely with everything going wrong because it just won't be competitive. Although the big thing I'm seeing in today's market is that there are a lot of deals falling out. There are a lot of times that we are invest in final on a project and suddenly somebody comes in and offers, 2 million more, 3 million more, 5 million more, because these are some large properties. And look, can't make the numbers work at that. That's too far out there. It's too risky. But a lot of times then I'm like, no, go award it somewhere else. And so they do. But then sometimes people are getting a little bit more real as they're actually really getting lender quotes in, really seeing what's going on. And so sometimes they're walking away from deals now. And then the big thing that I'm seeing is that the brokers are coming back. They've already gone through a whole marketing process. They don't want to start from square one again. The sellers don't really want to start from square one again. Sometimes they've got a certain number that if we don't exceed this, we're just going to hold it. Other times they are just actually sellers. And so they're oftentimes bringing it back to just 2 or 3 groups that have toured it, that at least have underwritten it, that are familiar with it, but that they have experience with, that they have transactional experience with, that they know will close. And so there's been a lot of times that we've had at least second looks on things. And sometimes it doesn't work out anyway. Sometimes it's still too expensive. The expectations still aren't quite right, but at least really having those relationships gives you an opportunity at that last look.
And that's a softening, I think, in the marketplace that we maybe weren't seeing 12 to 18 months ago.
Oh, for sure. That softening wasn't even there probably 3 to 4 months ago, but definitely has hit a bit now. I think the NOI growth from rent increases, from inflationary pressures, particularly in a market like we're in Texas, I think will mitigate that over a longer term. I think the true uncertainty is probably a little bit shorter term, but I think it's going to be a bumpy ride. And I think that really making sure that you're paying attention to the details of operating your assets is going to be hugely important in the short term.
Tell me about that. I mean, you guys have taken a unique angle on supplies and logistics. I mean, it's something that you told me about this off air, and I want to hear more about how you guys have solved a lot of the supply chain constraints around logistics, around construction. Talk to me about that side of your business and how you have solved a problem that many people haven't.
Sure. I mean, we started out self-managing from the very beginning and still do. And so we also have a construction team that is in-house that does all of the interior renovations. We found some fantastic GCs to work with as far as exterior, but it is just a very labor-intensive piece to do the actual interiors of the units. And so we brought that in-house a long time ago. I think there's some newer players to that space that are doing things pretty well if you do want to outsource it. Haven't tried them myself personally yet. But the things that I tried years and years ago just didn't work out that well. So really bringing those things in-house. And then we were fortunate on the second property we were buying, we knew we were going to need 200,000 square feet of flooring. So actually had a partner that was a Chinese national, went over to China with us, found sourcing for that. Over time, really built out that entire piece of the business, bringing in a lot of the renovation materials that we were going to need. And so obviously, when tariffs hit, we had to realign the whole thing again and find other vendors in different areas. So we've done a lot of that. Also built a lot of in-house or domestic partnerships. So we're distributorships for Frigidaire and GE and those kind of pieces. So it's not that we weren't without refrigerators for a little bit, but it was a much shorter-lived thing than most people were experiencing, for sure.
Right. Yeah, it's a business all in itself. I mean,
It is.
And to build those out takes a lot of team and a lot of, I guess, planning ahead of time. I was reading yesterday, there was something about you're talking about just entrepreneurship in general, and they said the main thing that most entrepreneurs struggle with is documenting their processes early on, because they can just do it themselves faster, and then all of a sudden they're at scale mode and they go, oh my gosh, no one knows how to do what I know how to do. So how have you overcome that and scaled? I mean, you guys have a massive operation. How have you done that?
We do have a large operation. So we use EOS, which is Entrepreneurial Operating System. It's based on the book Traction, or Get a Grip if you like the storytelling portion of it better. So I think that's been hugely impactful. It's a good way to get information to where it needs to go to make the best decisions to really impact the business. They're obviously huge in documenting processes. I'm very, very fortunate. I've got a couple members of my team, particularly one that is outstanding at documenting processes. So it is just sort of, even if it's totally not her department, has nothing to do with the things that she normally touches. I'm always like, okay, teach it to Allie, get her to write it all down. She will put it with the screenshots, with the stuff, and really kind of put that together. And that's been huge, obviously, as you grow. It is hard to pull yourself out more and more.
Absolutely. Absolutely. Yeah. I think that's I love hearing, especially when, you've gotten to a point where you guys are, where you have not just built a multifamily business, but you built a construction business, you built a logistics company, you've built a lot of different operations, and they're all, uniquely different. So it's one thing to build one company, but when you're building 4 or 5, then I think it's certainly an interesting story and something we can always learn something from. Tell us, what are you guys doing right now to remain competitive? I mean, there is, like you said, we're seeing a softening of the market, but it's still a competitive marketplace out there. What are you guys doing?
I mean, I think the big thing is really sticking to our numbers. Not every deal is going to be a good deal, particularly not in the current environment. There's a lot of things that just prices went up so fast, so quickly, that kind of everybody thinks everything is worth a fortune right now. So I think really paying attention to those things, digging into what it is. Obviously, with having our internal supply chain, with having some of the construction pieces in-house, there's a lot of savings that we're able to get from that in terms of just the general logistics, the supplies, the other pieces of that. So there's a lot of cost savings that can come just from that vertical integration piece, but also it's hugely important to just really watch the numbers, make sure that you've stress tested your stuff. It's better to walk away from a deal than to get in a bad one. So, it is hard to be competitive, but don't get so enthralled in the thrill of the chase that you go after something you shouldn't.
Right. That is a personal flaw I'm trying to overcome as a deal junkie. It's like, oh man, it's so fun, but then you're like, no, this doesn't make any sense at all. So that's absolutely awesome. Tell me this: what's a mistake maybe that you rewind the last 11 years? I think you said you started in 2011. Is that right?
Mm-hmm. Yeah.
What's a mistake you've made that you think other people could avoid making?
Well, I think one of the things is, especially early on, because we've been very capital gain focused and very kind of net worth building, not just for ourselves, but for our investor group, is very focused on the general capital gain, much more so than cash flow. And so we're always trying to sort of accelerate the process of get the renovation done as quickly as you can, get the rents increased. So we had one property where I probably pushed a little too fast and a little too hard. We were getting the rents for sure when we were leasing up, but kind of dropped occupancy a little more than I expected, and stayed there for a little while. And we were fortunate. We were still cash flowing, even at a lower occupancy rate than I would have liked. But I think especially as the market has tightened and gone up so much, the big thing that I learned is to take it a little more gradually, even if it takes 3 or 4 years, or a little bit longer to get through the project instead of, 2 years and 1 month. Taking that time, like I said, back then, it wasn't so much. I mean, there were a few sleepless nights over it, but it was never actually a problem. Right. But right now, with where mortgage rates are and where property taxes have gone and where insurance has gone and all of those other pieces, there just isn't as much net to fall into anymore as there used to be. And so I think that's one of the things is I've taken it just a little more gradually. Make sure that you kind of test it, work in steps, work in phases. Oftentimes the properties that you're able to find that are a good deal are the owners that haven't paid attention to the market at all and have cared only about, as long as I'm 99% occupied, that's all I care about. And so oftentimes they are $300 or $400 below market on some properties. And so, but you have to take that kind of in steps to make sure you don't clear everybody out all at once and end up with an occupancy issue.
Right. Yeah. Because if everybody there is used to $400 under market rent and suddenly you raise it, it can become a real issue. So that's really, really good advice. I think a lot of people, when they look at where you are in your business, they say, gosh, I could never get there, right? Because they think, man, now you got it. Now Kim's got this figured out. They got this massive company. They're kicking butt and taking names. We can't get there. But I know that every business still has its own needs and its own things that you probably see from the inside looking out, where you say, man, we could improve X, Y, or Z. What are those things, if you don't mind sharing?
Some of the things we have been working on some software development. It's been a more challenging piece of it because neither of us are actually coders. We don't really have it. We've hired some talent now, obviously, to get that done, but have tried to work through some offshore pieces, and that's been a little harder. It's with everything else, we were able to be like, just move out of the way. I'll install a light fixture myself, kind of a thing, or just give me the spreadsheet. It's fine. And obviously, anytime that you start expanding your business into areas that can be hugely impactful and effective, but that aren't the skill sets that you personally have, and you can't say, just get out of my way, hand it over to me, I'll fix it.
Right.
That's definitely a piece. So that's we've been working really hard on trying to make sure that we find some top outside talent on the pieces that we don't know as well.
Gotcha. So, what are needs when you say software development? I'm really curious because I can't think of anything off the top of my head. What's a software development need that you find that's not already in the marketplace?
A lot of it's just automating a lot of our processes in terms of the renovation piece, some other pieces, some of the great skills that our accounting team has. There's a lot of things that we can just automate. Hey, go check and make sure all 4 water bills are in.
Right.
Rather than having an actual person have to go look in the GL, click and make sure all 4 water bills are in that number. Just a lot of smaller things to just really speed up and automate the more boring aspects of some of the business that are involved in really doing it right.
Right. And those are huge things because, suddenly you're 2 months later and the water company is, calling you or shutting off your water and you're like, how did we miss this?
Or your financials just look really screwy 2 months later because suddenly there's one meter that didn't get put in. And so now, you've got your books closed for prior months and why'd you have this jump in water consumption? Well, I didn't. It's just something didn't get put in before the period got closed. So
it's always something. And I think that's in its own right is comforting to know that the problems never go away. They just change. So
they do.
And obviously take on a different tone as you grow. It becomes less of like, how are we going to grow? But now how are we going to manage the growth that we have, which is I think a more fun place to be perhaps, but the problems never do actually go away. They just, like I said, they just change. Kim, this has been a blast. Thank you for taking the time to come on today, share about your business. You guys are doing awesome stuff there. If our listeners want to get in touch with you or learn more about you, what is the best way to do that?
Sure. So sort of 2 sides to our business. The supply and logistics side of the business is Exist Multifamily. So you can go to existmultifamily.com and see, because we service not only our own properties, but about 250 to 300 other properties in terms of those supplies and logistics, getting everything in a single kit box for your upgrades so that your guys are not spending the whole day running back and forth to the shop or running back and forth to Home Depot, even worse. And then also on the investment side, invest at exppg.com, tells a little bit more about our general side, and even emailing invested at exppg.com, whether it's for investment purposes or other pieces. That team is fantastic at finding the right person to direct you to inside the organization.
Awesome. We'll make sure we put all of that in the show notes. Kim, thank you again for coming on today. I certainly appreciate it. This was a blast.
Thanks, Sam. Had a great time.